Okay. Hi, everybody. Welcome to the Pace University's Cybersecurity Insight Interview Program. I'm Ariel Evans. I'm your faculty chairperson and your host for the program. Today, we are going to talk about the future of finance in a post-COVID world with Theodore Tomita, who is the Executive Vice President and the CTO and CIO. Could they make you any more important? It's like
my business card's about this wide.
Exactly. Who's working at Catskill Hudson Bank, and he's got over 11 years of experience in the banking industry and over 25 years working in technology. He has been an officer in the U.S. Air Force, and he was a U.S. Air Force honor graduate. Thank you for your service.
Thank you.
He holds various engineering and certificate. One more time. Haven't had enough. I was up till 3 in the morning yesterday, so it's like, oh. Well. Anyway. He holds various engineering and cybersecurity certificates, and he designed the network at Catskill Hudson Bank in partnership with Spectrum Enterprise. And he has been recognized by them as having one of the most reliable and secure networks in the banking industry. In 2020, he was the recipient of the Game Changer of the Year Award, which was by DGN Tintri, for his work and innovation and disaster recovery during the COVID pandemic. So please help me welcome Theo to the program.
Hey, everybody. Thank you very much. Thank you for having me, Ariel.
You're welcome. It's my pleasure. I'm really glad to have you on the program. So let's talk a little bit about the banking industry and what were some of the big takeaways from COVID? How were they affected? And we'll start with that.
I think most banks were woefully unprepared for what we came from. Pandemic testing has always been part of all financial institutions, as part of our business continuity plan. And it's always been looked at like a tabletop test. We never actually, you don't predict an actual pandemic or a volcano or something of this scale it's going to actually hit. While we prepare for it, this was a shocker. Banks are critical for infrastructure. We were, we're mandated to continue running. So we don't have the option of just shutting down. But banks aren't really built for a work at home environment. People need to come into the bank. So I think the entire industry got a wake up call just how much they're relying on their technology and relying on their buildings at the same time to keep the bank up and running. It was it's still a very difficult time for us.
So what technologies have been implemented that can allow banks to continue operating even though they're in this lockdown state?
Well, what's interesting is that banks were, if you go back into the 90s, early 2000s, banks were on the cutting edge of technology. And then regulation stepped in. And regulation always hinders technological advancement when it comes to, especially banking, hospitals. You end up choosing safety of an audit versus regulatory invention. Regulators like everything nice and simple, check the box, move on with their day. And to get outside that comfort zone is very difficult for banks. In the pandemic, the work inside the box was not very simple. So we had a lot of people that started work from home. We needed to be able to keep the banks running. So we implement video conferencing technologies. We have to implement ways to allow customers to interact with the bank, send data to the bank, as our branches were very limited on how we were opening. Our doors were not opening. We were doing drive-throughs only. But businesses, as we're a commercial lending bank and moving into residential lending, we focus mainly on businesses. And businesses what we're struggling the worst during all this pandemic. So as a business trying to support other businesses, the technologies we were bringing in was everything from video conferencing systems to ways to get data from our customers securely without creating risk at the same time. And unfortunately, those two don't go hand in hand very well together. So it's been a balancing act. It's the operational side of the bank, what's needed to keep the bank running versus what we can do without getting ourselves in regulatory problems. So it's definitely been a juggle for how we move forward. And I think for everybody, it's going to change. It's going to force the banking industry to have to step forward.
Thank you. So how have these technologies created additional security risks and how are we mitigating them? What does that look like?
So you've got a vast difference in technologies going on right now. I think the main one being the industry as a whole, the banking industry as a whole, has always looked at technology as what's necessary to operate. We have then switched over to an environment where now we need all these new tools. PPP loan was a great one, in which we're trying to allow customers to apply for these loans for payroll protection programs to help keep their businesses running. And as a whole, as we bring in these new technologies, and as people venture out into other technologies like Venmo and the Cash Apps and all these other ways of paying their bills, because everybody's jumping on some financial bandwagon to try to bring in income, but they create these giant risks. Like Cash App is a great one that we deal with constantly. Is they're using this because people are trying to get any way they can to get paid up and quick and running. Restaurants are doing this at large scale. They're doing mostly delivery, so they find whatever cheap, easy way it is to get their money, to get paid, so they can continue servicing. And from a bank's perspective, it creates a double-edged sword. We're trying to help our customers and trying to be there for them. And all the technology that you implement, if it doesn't have security first, what we end up with is fraud and theft. And it's just been a nightmare to try to balance the banking world of what is traditional finance and a post-COVID world where finance is looked at, do whatever you have to do just to keep them running. It's an impossible balance at this point.
Yeah, so tell me a little bit about, I want to talk about DFS, because I think DFS is, first of all, something that we're going to be exploring at pace. But before we do that, talk a little bit about what you did to get this recognition for the Game Changer Award. I think it's interesting, and I remember talking to you about it when you and I first met like a while ago, and it was very cool. So could you just tell the audience a little bit about that?
Absolutely. So for those of you not aware, Tintry is a storage array, but it's a VM-aware storage array that is logical to VMware. So it doesn't operate with LUNs and where you're carving up data. It's actually a processing storage array. So it can do anything from holding a virtual machine to holding an entire SQL database and processing the data in real time. So it stands kind of unique. It was actually designed by the people at VMware. What we ended up doing in the pandemic was, like most banks, we weren't designed for a work at home environment. So now we have 30–40% of our staff that needs to work in a home environment, but they have to operate as if they're in the bank. And that creates great excuse me, I didn't have enough coffee this morning either. Security concerns, both physical, but more importantly, electronical. When you're sending data into a bank, whether you're coming in through a VPN, whether you're coming in through any kind of tunnel, you're still creating a risk that transactions could be manipulated, data could be stolen in transit, an unsecure connection, malware on their computers. So we ended up having to do an entire rollout of building our own infrastructure that would work in people's home as if they were in the bank. And in order to do that, we turned to blockchain technology to allow our transactions to be verified and basically built a sort of an MPLS out of all the home network computers by working with Time Warner. We took all their home connections and pumped it back to one of Time Warner's data centers and was able to use the blockchain to validate the computers against each other. So it was multiple validations coming in that the transactions that were being processed were actually legitimate. In doing that, we sent the data to the data store. And instead of using the data store just to store data, the data store was actually crunching the encryption calculations that we applied to this infrastructure to make sure that everything that was running through the data store was being processed, decrypted, handed off, verified, and then put back into the data store in a separate partition that could not be accessed from outside the bank. So it was only one way in and one way out. And you had to go through this special design that we came up with. And it ended up changing a lot of the way people looked at data input over VPN. And for Intra-DDN on the fact that you can process data using the internal processing power of the data store, as opposed to offsetting it to a machine to process data. So it created a really interesting scenario where everything just worked in unison with each other, and nothing that came in wasn't validated, verified, and knew to be accurate. So way a step further than a VPN, but not as much as being in-house. And then when we implemented the blockchain, it ended up becoming more secure than actually our in-house environment.
That's amazing. And have other banks adopted this as the best practice? Because when I'm listening to what you're saying, I would think that that would be something that everyone would want to do. What have you seen?
No, actually, this was a theory that Intra-DDN themselves had. I wasn't aware of it at the time. I ended up proving the theory correctly just by going through my processes. It took about a month to validate what I'd actually done. They kept coming back and looking at it and coming back and looking at it again, going, that's not possible. It was, the different banks are experimenting with different ways of using blockchain technology. Unfortunately, a lot of them are using it for the standard cryptocurrency, transactional, not looking at for securing data and using the basically botneted computers that you're creating to validate the data before it ever enters the network. I do think the original purpose of blockchain was lost. As we went to cryptocurrency, people are like, oh, blockchain, cryptocurrency mean the same thing. It's a validation system. It's a way to complete a complex math equation without having to use singular power. But no, I feel that, Chase and I know Citibank are working a lot with Ripple. They're using it for international wires to speed that up and to secure those transactions. But most banks aren't looking at their internal data infrastructure, which is a shame, because that's where your biggest risk is the data at rest and the data in transit.
Exactly, and hence the digital asset approach to risk and risk quantification and risk scoring and understanding it from a digital perspective. We've got a question from David Gordon. Is the bank looking into ways of leveraging and protecting Bitcoin or blockchain applications?
We always tell everyone the same thing. And I know Bitcoin recently hit $50,000 a coin. I always find it interesting. 50,000 what? It's not based on any value. There is no value to Bitcoin. It's a prospective value. These are not commodities that you're actually trading. They're not investments or businesses. You're hoping that the people that are controlling this environment are doing the right things. Let's all be honest. We all know they're not. You watch about a stock market. There's this very small group of people that are manipulating this. The Wall Street bets thing was a great example of it. You have a small group of investors that can pump it up. They dump their value. They buy it back when it's small and they do it again. Blockchain's been doing this for years. Also, really, there are very few legitimate places to use blockchain or Bitcoin. It's not exactly a widely accepted currency anywhere. And the places that you are using it, we don't find to be the most legitimate places. So while it is gaining in popularity, I don't know if a bank would ever, at least for the foreseeable future, ever want to be involved in anything doing that. We do our best to try to block people from investing in that. Because a lot of times they get caught up in the, what do they refer, the fear of missing out. And you'll see people taking loans out to try to buy Bitcoin. It's taking their entire savings and putting it in Bitcoin. And then, why did you let me do that? I was like, they didn't let you do anything. And then there's the inherent regulatory issue with that. The governments are clamping down on this. New York is an hysterical state with this. It's one of the most amazing things that has come out in the last couple of years is there's this nationwide push to legalize marijuana. New York is a very democratic state. Regardless of your opinions on what's important and what's not important, you have the federal government that has their laws, the state that has their laws. And in New York State, we have Department of Financial Services and Governor Cuomo that has an agenda. And their agenda seems to be very conflicting with the federal government. So it's funny when you look at what the most common use for Bitcoin is purchasing narcotics. That's always been its most popular use. Silk Road was the greatest example of that. Well, New York State wants us to bank marijuana facilities, but they do not want us to bank gun facilities, which are federally legal and protected under the Constitution. They don't want us to finance the marijuana facilities as they grow and the growers. And so as a financial institution, it's literally becoming a tool for politics, not a tool for protecting. So the bank has to take an ethical stance on what it's going to bank, what it's not going to bank. And I just don't think Bitcoin has a large future in the banking world until it can be regulated in some sense, or there's something value put behind it.
Exactly. So let's pivot, and thank you for that question, David. And anybody else who has a question, please remember we're going to open up the last 15 minutes or so. Please put your questions in the chat. As they fit into the conversation, we'll put them right in. And if they don't, then we'll put them at the end. But we will get to everyone, hopefully. So you're in my favorite topic, DFS, right? And let's break it down for the audience, maybe in terms of, first of all, what your experience has been working with DFS. You've had quite lively conversations with some of these folks, and talk about that a little bit. And also, let's talk about, what does this really mean for banks? Like, how does a bank become compliant with DFS? Because DFS is a mouthful. And although I think the intentions were good, just like with CCPA, the intentions were also good. The intentions were to really regulate Facebook and Google, but what happened is that they didn't write the regulation so that they de-scoped like the mom and pop coffee shops, as an example. So anybody who is doing a certain amount of transactions is going to fall in scope for CCPA. And I think we have similar issues with DFS in terms of maturities of banks. And, you know, we've got the colossuses like JP Morgan Chase, and then we've got the regional banks, right? So tell us a little bit about your adventures, and then let's get into where some of the, what's the good, the bad, the ugly, I guess would be the best way to say it.
So a lot of what DFS does is reactionary. They're trying to take a progressive stance, and they should be applauded for that notion. Is we want to be the most regulated cybersecurity institution, monitoring organization in the world. All right. Regulation and ingenuity do not go hand in hand. So where DFS is doing it right is that they are trying to push a technology first, cybersecurity first. They want to be involved. They want to be pushing banks to go to the next level. Now that they should absolutely be applauded for. Where they lack it is the technical know-how to understand what it is they're asking the banks to do. DFS at one point, I don't think they had any regulator, anybody that was in their IT space. I went for years where my audits were done by the FDIC. New York State has nobody that's qualified to do an IT audit. And today, to this day, I still haven't met an engineer working for the state of New York that does DFS auditing. Most of the time, they're people that were trained in one class and moved to another. So they came from BSA and they took a course. Now they're an IT auditor. But just as all institutions are not built the same, all networks are not built the same. We had set out on a mission a long time ago. My chairman is very progressive. Our bank is very progressive in being a technology first bank. Simplification for the customer. It's the motto of our institution. So if you're going to embrace technology, you have to embrace all that comes with it. And that's where DFS starts falling short. They want technology implemented, but only technology that can be understood by the general populace. Well, in order to create real cybersecurity, you need to get off the beaten road sometimes and bring in technologies and layers of technologies, and also explore new avenues of doing things. One that comes to mind was the difference between reporting and alerting. Is one that they have a very different concept on. You know, a report is after the situation, you're going back and reviewing. Alerting is real time. Now we're a heavily alerting bank. That doesn't fit into those nice little guidelines of what DFS wants to see. They want to see you're looking at the report every month. But that report, some of that stuff's going to be 30 days old. So how relevant is it to today? You need more of a alerting standpoint. Anybody that works in IT is going to say, you want to know the moment it happens, not after the fact. The biggest issue, I think, is the DFS regulations didn't bring anything new to the table. Most financial institutions were already doing nearly everything in the DFS regulations, especially the 500 CR 23 regulations. We are already required to do that under FFIEC, you know, annual penetration testing. Okay, that's great. We're doing that. But they didn't take it to the next level. You know, they didn't say, let's do quarterly penetration testing. That's going to step it up a notch. No, we're going to stick with what's already out there. In the places that they went new, it was almost as if nobody understood what could happen. My favorite one in there is multi-factor authentication to the core. How do we do? The cores were built on an I-series in the 80s. They have done their best. Most banks out there run FIS, Jack Henry, Fiserv, Fidelity, D&H. You have a core system that was built a very long time ago. Multi-factor authentication is not an easy implementation for any of the core providers. From my understanding at this point in time, none of them have been able to successfully roll out multi-factor authentication at your core data point. Now you can put it on the computers, but that does not solve the problem of your core data. So that whole regulation ended up being a waste of time because it was like multi-factor authenticate the computers, but all the important data is just sitting there. I really think the biggest problem we have with DFS as a whole is willingness to adapt to what you're asking. You have FFIEC that's taken a broad stance on cybersecurity as the most important things that a bank do. You can look at their ratings and how many loans they have and their asset size and everything they do, but a large bank or a small bank, when it comes down to it, it takes one good cybersecurity event to untilt that bank and create mass chaos for everybody. So while we do so much due diligence on our loan concentrations and you know, who we give money to, when do you stop and look at what's actual cybersecurity? And it seems like there is a gap, especially in New York, where the Fed's going, this is the way we need to head. And DFS is going, nope, we need to go this way. And the banks are stuck in the middle. And I'm not one to be really stuck in the middle. So I tend to just go off the reservation and do whatever I feel is the right thing to do. And then I have a lot of interesting comments and conversations on American Banker because they seem to like to call me whenever there's this issue. Is where is DFS going? And the answer I have is I have no idea.
Some of the things when I read the DFS, right, what kind of stands out to me about it is that this was not written by somebody with a cyber background. It seems to me that this was written by somebody who maybe peripherally understood it, but not from a deep cyber background. And a lot of the ways that they've phrased things, to your point, are either not fit to purpose, or I would even go so far as to say somewhat incorrect. You know, to call a risk assessment, which is really a control assessment or risk assessment, like that is just completely misleading to anyone who has to implement that particular, you know, function. So it'll be interesting to see what happens in the next year, because this is something we're going to be pursuing this next year, folks, on the committees, probably kicking it off sometime in the summer. We've still got the other committees going, but this is something that we think needs to be addressed because we don't think people understand it well enough. And to Theo's point about MFA, there's going to be some limitations that people are going to run up against. So how do you address that with examiners when examiners are reading one thing and you're completely unable to comply because they don't understand that you're running legacy? So it's a very interesting conversation, and we're going to have a lot more conversations like that. We've got a couple questions. I'm going to just jump to those. Let me just get to the first one. So Francois wants to know, is wondering how banks were thinking about Bitcoin. I think what he means by that is, are they thinking of accepting Bitcoin in terms of, you know, a legal way to do a transaction?
I don't believe legally right now we even could if we wanted to. You're entering into money could be coming in from overseas. Again, it's untraceable and trackable money. It opens up a lot of BSA issue, opens up a lot of fraud issues. Bitcoin is just problematic all the way around. I think the biggest problem a bank would have to do is if we receive $3 million in Bitcoin, is it cash? I mean, how do we treat that transaction? Somebody deposits $3 million in cash, we have steps that we have to take. We have government bodies we have to notify. Essentially, Bitcoin comes in as cash. It's a cash transaction. So are we going to file a CTR, a cash transaction report, notify the federal government on this? Also, there's a taxation issue. In the US, we have to pay taxes on gains on Bitcoin. But then you have the other end of the house, which is under the Patriot Act, looking for things like money laundering, terrorist activity. How do we accept that money when we have no idea its source of origin? It could be coming in from Afghanistan, Iraq, Russia, all these places that aren't exactly, looking to be our best friend. I don't know how a bank would honestly go about accepting those transactions. I haven't heard of any banks even going down that road. We have a lot of bank committees that are out there. Bitcoin obviously comes up a lot, and the kind of stance for everybody is just steer clear of it right now until the government can get a grip on it. About a year ago, they were hammered. It was like every government in the world was just locking down. You can't buy Bitcoin. You can't trade Bitcoin. You can't go on the exchanges. And Bitcoin collapsed under that weight. And then you get a few people that support it, and they, the government moves on to something else, and then Bitcoin value jumps back up. People start buying it again, and then the Bitcoin conversation comes back around. But I don't see a way to ever legitimize it when you have a governing body like the FDIC that's insuring money, and a government that's backing that money, and governments around the world that are doing the same, and you're going to say this is legitimate money, but that's controlled by an anonymous source somewhere on the internet. We have no idea where this originated from. I don't know how we conduct a transaction that way.
Exactly. And I think the other thing that, from an SEC perspective, they are really upping their game in terms of looking at Ofac violations. And, we all know that Bitcoin is the currency of the dark web, right? And dark web, we're talking illegal narcotics, we're talking child pornography, we're talking guns, we're talking mercenaries, we're talking all kinds of nonsense, right? And the reason is because of anonymity. I can be anonymous on the dark web. You can't trace my Bitcoin transaction back to me. So I don't see this as being a legitimate venue for the banking industry anytime soon, if at all ever, frankly. We really need to be cognizant of, regulation is here to protect us. It's here to protect us from being scammed. It's here to protect us from ourselves sometimes when we think we know better. So good question. Thank you, Francois. I have another question in relationship to one of the next topics I wanted to get into, which was fraud. Fraud in the banking industry is nothing new. We've been there, done that, So the question is from Mark is, what has been the bank's experience with fraud of P2P transfer services like Zelle, Venmo, Cash App? What are the best practices for balancing fraud mitigation with providing a better consumer experience with the bank?
So, and this doesn't go for all of them. I mean, we have our favorites out there that are legitimately scammy. I don't want to blast names out there, but there's one that I personally have an issue with, which is Cash App. The program itself is run inherently problematic. And for the bank's perspective, what we see is during this pandemic, Cash App presents itself to a lot of other institutions as a financial institution, which it is not. And a lot of people don't understand that when your money ends up at Cash App, it's not insured. They're not a bank, and they're not required to take the same steps that we are to protect you. So what we find out with Cash App is, and this has been there's so many federal investigations on this right now, it's not even funny. states like Virginia, they were desperate to get unemployment checks out to people in hard hit areas. So they put up a website, and all you needed to do to qualify for payroll protection or the unemployment benefits was been alive last year. That's it. If you were alive in 2020, they just assume you're alive in 2021. So people are going onto the state of Arizona's website and filling out unemployment benefits and sending their money to Cash App, which is presenting itself as a financial institution. And the financial institutions are responsible for verifying that the name of the person getting the money is the name of the account holder. Well, Cash App doesn't do that. So then they take that money and they transfer it to an actual financial institution to legitimize the money, which then we start having to track back over and over and over to see where the origin of these funds came from. And there's so much money just flying around right now. They always revolve around these type of apps. You know, back in the day it was PayPal, and then PayPal tried to get more legitimate. And they've done a great job of that. But these peer-to-peer payment programs where a lot of banks jumped on the bandwagon. Let's get, Zelle in there. But all you need is a phone number, to open an account. But in a financial institution, you need a lot more than that. We need to be able to verify who you are, where you live. There's cash involved in this. I can go to Walmart, buy a burner phone, open up an account at Cash App with no actual name as John Doe, and have people sending money to me, transfer the money to a real bank. Now it's coming in as my name, and then throw away the burner phone, close my Cash App account, and that money is untraceable at that point, because according to them, they keep no records. So I do think the Zelles are getting a big hit from that, because I think they are trying to be a legitimate company. Venmo is another one that's really trying to differentiate themselves as a safe place to do peer-to-peer, but they're getting caught in the crossfire of the 4,000 other companies out there that are doing it that are not. I miss the days of Western Union. You needed to send money, Western Union it over, pay your $25 and be done with it. Now everybody wants in real-time satisfaction. I want to pay right now. I want to receive right now. And the banks aren't ready for that. The FDI, the Federal Reserve is working on instant ACH. That is starting to roll out around the country, which will be a safe and secure way of sending money instantly to another person. But without government-backed funding, I think any of those peer-to-peer payment programs are extremely high risk.
Yeah, absolutely. Good question. Thank you for that. So one of the things I was curious about was, what are the other states doing at the banking level? Or is anyone else considering a state regulation like DFS in any of the other states? Or so far, is that just something that is a New York State imperative at this point?
New York State right now stands alone in their need to govern. California, I've heard, is working on their version of it. And if what I'm hearing is true, it's actually a more logical version on it. They're forcing the FFIEC, the government regulations, on a more strict level, which that is okay with most institutions. But when you're a smaller bank and you have the state having stricter regulations than the federal government, and your money is insured by the federal government, then it becomes very difficult to operate. I've heard rumors that Jersey is going to follow suit with New York State regulations. They're basically going to tweak them a little bit. It was something you said before that caught my mind was, you said that the person that wrote this didn't understand what it was they were doing. And funny enough, from what I'm told from the people in the DFS, it was actually me that they got the information from. I was speaking at Black Hat a few years ago regarding cybersecurity and banking, and New York State DFS sent people to Black Hat. We discussed all the topics that are in the regulation, but we were discussing them for a different reason, not for a reason of building regulations off them, but simply for the fact that these technologies can help mitigate damage from an internal theft problem, not for a regulatory point of setting a landmark, regulation to say everybody must notify us within 72 hours of a breach. In 72 hours, you may not know the extent of the breach. The federal government got hacked through the SolarWinds hack. They didn't know for freaking 6 months. I'm supposed to know within 72 hours of what happened. So a lot of this is just, you're right. A lot of times the people writing the regs are not engineers. And had they brought in an engineer, they would have sat there and said, whoa, nobody can do that. That's not possible. I think that's what everybody's lacking right now is qualified cybersecurity personnel. And I hate that word cybersecurity, information security personnel. That word's gone rampant everywhere. And there's no difference. Information security is what it's always been. Cybersecurity is an extension of that, protecting your data, protecting from breach. That job hasn't changed. It's the most important thing we all do as IT personnel is to protect data and protect our customers, protect the institution. But I don't think any state has it right. I think the closest body we have to it is the FFIEC, and they don't make regulations, they make guidance. And it's better to have an idea than a rule, because not every rule is going to fit for every environment.
Exactly. And, it's the beginning, right? So this is the first rollout. It's going to have several different versions. We see PCI rolls out every 2 years, right? They've been around since 2006. We've got almost 20 years of PCI, 15, right? We've seen many, many versions and improvements to that. I'm hoping that they do the same thing that PCI does. I hope they take a more SIG-based approach and have industry experts come in and weigh in on it a little bit more than what happened when they rolled out the first one.
We did try. There was a comment period, and a lot of us did comment. They didn't listen to any of the comments, but we did comment. I sent in probably over 100, and I nothing changed. The one I saw was the draft is the one that came out as the final rule.
Yeah, which is, again, goes to show you that they really weren't using the committee, right? They were pretending they were using the committee so that somebody can't say, well, you did this in a vacuum, even though that was the end result, right? One of the things I see the governments and the United States is really not doing a good job of this and this is not just in the banking industry, this is across the board. Look at the COVID response, okay? Having the state, for some things, right, there should be a national response, right? And I think banking, anything that's critical infrastructure related, right? Like nuclear power plants, banking, water treatment facilities, anything that could, cause irreparable harm to the United States should be at a national level. It shouldn't be at the state by state nonsense where we get to just, say, okay, the governors of the states have to do all this nonsense. It's like, it's creating a lot of waste and redundancy, frankly. And the EU realized that their regulation isn't perfect either, but at least they're on the right track. Okay, let me take some other questions here. Okay, from Sean. Do you foresee banks creating their own intra-digital asset currency platforms to better track transactions? Well, that's a good question.
As I said earlier, Chase Bank, Citibank, they are doing that. They're using Bitcoin to kind of bypass the intermediate banking, exchange banks, Federal Reserve, international wires. There is a benefit of using a blockchain technology for that reason. And it is simply speed and security. The wire system is inherently slow. You have a receiving end, you have a sending end. ACHs are not incredibly quick. So they're trying to take out the middleman and getting money to correspondent banks. So I do think that banks will use the technology in that sense, but it's going to be strictly an internal thing, not something for the general public. That was the whole purpose behind Ripple initially. I think they got off the reservation and started, now it's being traded. If it's a traded coin, no, it has no value to a bank. If it's simply built for the technology of allowing the bank to send money between two banks to have an agreement that says we'll accept 1 million of these coins will equal 1 million US dollars, and then you do a currency conversion and you're not doing it as an anonymous transaction, then banks are going to be all over that. That's a speedy way of getting money from point A to point B without the 40 hops to the middle. But
blockchain technology can be used to have some type of a ledger to track back and understand who actually has owned that particular coin throughout the history of the coin. Yeah, it's an interesting perspective. Well, we'll have to see what happens. Okay, another question we have, a couple more questions. Okay, great. Question from David. Is the bank thinking in terms of continuous pen testing, red teaming, social engineering to maintain its security posture versus point in time approaches?
Absolutely. That nails cybersecurity in its current stance right on the head. Pen testing, vulnerability scanning, our institution, for example, we pen test nightly. Every single night we run quick scans, targeting specific items in the bank, critical infrastructure. An annual penetration test that's a regulatory need. That is not data that's valuable. Your vulnerabilities are a higher point of risk than your penetration test. Because in your vulnerabilities, you can say, this is a mitigating factor, this is a mitigating factor. That's great. Penetration test proves whether that's true or not. But on a day-to-day basis, we should be constantly scanning our network, looking for the weaknesses, patch management vulnerabilities, open ports that don't need to be open. New risks are coming out every day. I mean, Tenable, Rapid7, all these companies, they built these tools to try to keep track of every single vulnerability that's coming out and to give you mitigating techniques to get rid of the risk. So I think for all not just banking, but any industry out there, investing in good penetration testing and vulnerability management software, tracking those vulnerabilities becomes critical. That's priority one of any good cyber-based program is how well do you know your network? Where are your weak spots? What are you doing to protect them? And how are you managing the risks that are going with them? And that is essentially that should be your first step. Everything after that is icing on the cake. But if you don't know where your risks are, you cannot mitigate.
Yeah, I couldn't have said it better. It's that you can't protect what you can't see. And if you haven't inventoried and you don't know what it is, and you don't know how much exposure there is, and you don't know the likelihoods, then you might as well take a dartboard and throw it up against the wall and say, woohoo, let's just throw darts. This is what drives me nuts about some, lack of understanding in this area that just needs to stop. Great question. Thank you for that question.
A very good question.
Yes. Michael Meyer wants to know, what do you see as the top two biggest risks to DeFi traders and asset storage companies?
The top two risks are always going to be the transaction itself and the data at rest. So I think when you get outside of, especially with trading, I mean, if you're sticking with the main houses, you're fine. But there's so much going on with the theft of online accounting. We take a lot of steps in the way of monitoring how transactions are happening, knowing when the money's leaving. We have a whole system out there designed just to monitor the distance between two transactions to make sure that it's not possible you could have been here and then 3 states away 15 minutes later doing a transaction. But when you start throwing your money into online services, you end up back into that place where a transaction could happen. They can replicate you. They can look like you. I mean, we were investigating one where the IP address was actually the person's IP address, even though it was being run out of China. They were spoofing the IP address to make it look like it came through. And they just were sending everything through his computer, but everything was being transferred back. So they're getting more complicated to find these cyber criminals that are able to do this. But when you start getting into anything that's holding funding, I start getting nervous when it's not a bank. I mean, obviously the JP Morgan Chases of the world and their platform, and Merrill Lynch and their platforms are great platforms. I just think everything needs to be handled a little bit more cautiously in this day and age. And then you become your own worst enemy. How well is your own cybersecurity in your house? If you're looking at where this is going from, where this is coming from, you know, you may not have the resources at your home that you do at your office. Unless you're like, you know, the compulsive like I am. I've got 3 firewalls running and trying to keep everything secure.
Exactly. Okay, another question. Some of the recent research that I have read has been following points to, one more time, we'll try that again. Some of the recent research I have been following points to misconfigured cloud environments as a leading cause of data breaches. Do you view that as a vulnerability for the banks?
All right, so what we're referring to is probably the SolarWinds breach and misconfigurations in Office 365 on the cloud, the Google breach recently, where they forgot to disable the generic user that they were using when they set it up. And the biggest one was Amazon's breach, where they had with their containers, they were still using the same password at every container. So those were the 3 that I know hit really hard across the industry. Misconfigurations obviously are a train wreck, and they're also difficult to find. You don't necessarily know that it's misconfigured until somebody comes in and steps through the door. You know, misconfiguration is something as simple as having a default password from the application that they have a backdoor into the program and leaving that password the same as it was. I think everybody in this room has at one time forgot the default password to a printer, gone on the internet and said, what is Lexmark's default password? You know, that's what you're doing. But that is a misconfiguration. It doesn't have to be something as extreme as having your SSL certification in the wrong container or having a page that's not encrypted correctly. It could literally just be missing something minor that opens up Pandora's box. What was it? The IRS that had a database on Amazon Cloud Services, and they forgot to password protect it. So every social security number was available. I think that happened earlier or late last year. Again, it's simplicity, but this is where we go back to vulnerability scanning. Now, a vulnerability scan against that site, especially if you're using one of the modern products that are looking to get access to data, should have told you that I was able to access data on this website and have somebody review the data to see what was being accessed. And when it looks like a social security number and acts like a social security number, assume that it is one, and somebody go over there and figure out why you're seeing it. So, I mean, everything that we do, but you know, it's a security first approach. Make sure it's secure before you push it out there. And especially with the cloud stuff, you need to be careful. As you move into 365 and web forms and online databases, the more of the stuff that we move to the cloud, the more homogenized your data becomes. It's also sometimes being moved to other countries where the regulations around that data are not as strict as they are in the US. Banks have a big issue with that. We can't have our data hosted in China. But Google does have servers in China. And because they cross-replicate, your data, if it's sitting in Google, could end up in China. So that's an issue that you have to be aware of. Unless you're buying a self-contained environment where you know where the data is being stored, and that's probably the second most important thing you have to know of. Know what your risks are, but know where all your data is at all times. If they're sending it overseas to another country, if they're hosting you're buying a product, but it's a third party that's actually doing the hosting, you need to know that, because that right there becomes your risk as it's moving through disaster mitigation process.
And this actually was an issue in Israel with the banking industry here, because you cannot store, Israeli banking data outside of the country. So AWS web server was in Amsterdam. So data center, out of scope. So what they had to do over here was they actually had to have the telecommunications companies start building data centers that could actually provide the cloud services. And that took several years. So they were running behind in the banking industry. They're still running behind in the banking industry. I hate to say that really badly. It's awful. They still are. Oh, it's awful. It's like they're over here, though, they're faxing things. It's just like, it's absurd.
We are too. They still do it in the US. It boggles. If we have to send something to the Federal Reserve, we have to fax it to them. They still require IE11. I want to beat my head through my monitor yes. And it's still the required browser.
Come on.
You're talking about an infrastructure that was designed by a group of people 20 years ago and that nobody knows how to unwind. It's just, how do you update the system without deleting it, destroying it, without shutting down financial transactions around the world?
Yeah, it's definitely a big issue.
But yes, IE11 is the only supported browser right now for the Federal Reserve.
That's insane. Okay. Now I heard the most insane thing today. I'm probably going to hear it all day.
Yeah, I cry every morning.
I bet you do. I would. All right, I'm going to do another question and then we'll go to a wrap up. So are you mostly talking about scanning network and technology from the cybersecurity standpoint? Are you also working on human factor, hello Vlad, of security, like training employees against social engineering attacks, not only phishing, if not, is it in the plans?
Look, the most important thing you can do for yourself and for your staff is training. All the scans in the world do nothing if the people that are receiving the data don't understand what it is that they're doing. And the people that you're entrusting to use the network don't know how to navigate it properly. A long time ago, I had a colleague tell me that the internet is the most disgusting and dangerous place in the world. If it was a neighborhood anywhere in America, you would never go there. It's filled with viruses and crimes and drugs, and there's no happy news anywhere on the internet. Just go on Facebook, you'll see it's all bad news. So you have to do both. But I would argue that the training ends up being more important long term. There's always new things coming out, and the second you stop educating yourself and educating your staff is when you get caught. Every single virus that's ever hit, it hit multiple areas of an organization. Anybody remembers back to love bug virus? That thing spread like wildfire in one day because it could have been easily prevented, but everybody clicked on it, and then everybody hit the install because they thought they were getting the greeting card and I love you, and they were just compromising email addresses, and it just kept going and going and going. Your staff should be well enough to understand that we don't click things. At the same point, you have to do everything you can to prevent your staff from doing stupid things, because they will continuously click on every single thing that's in there. So this is where mitigating the risk and the damage that it could cause comes in the other hand. You train, and yes, phishing and spear phishing and malware attempts and website scanning, making sure that you limit what they have access to is all fine and dandy. But when a company you have a relationship with has their email system breached and they start sending out viruses, well, you now have a situation where the computer that is getting it is seeing, oh, well, this is the person we've seen data from before. The end user goes, I know this person. They're sending me a file. They normally send me a file, and they open it. Now, all those mitigating factors and all those vulnerability scans you have better be right. Because if they're not, you're going to be closing up for today and explaining why Sony lost the movie out in California.
Exactly. Okay, so let's talk about parting thoughts. Where do you see companies wanting to be in 5 years? Where should banks be in 5 years? And what does that look like for you?
I think this is a wake-up call to the world. Yes, we are getting vaccines out there. And I mean this, it's going to sound terrible, but before you go, let me finish. The pandemic needed to happen. because we have all sat around for so long just going, nah, we're not going to worry about that right now. It was about finances. It was about income and profit. And right now, if you're a business anywhere in America or the world, keeping your doors open is the main function right now. So technology is finally having its day in the sun in every industry out there. I've never seen so many restaurants accepting tap to pay, accepting online ordering systems. As a bank, we're rolling out mass technology improvements that years ago we would have went through regulatory nightmare. And now they're just like, you have to find a way to do this. We'll turn the other way, just do it. In that process, though, we have to remember, my favorite expression ever is compromising security for simplicity is sure stupidity. We always try to put security first. And I think the entire country, the entire world right now is learning you can't survive without technology. Your businesses will be gone. But you have to intelligently roll out technology. Everything should be rolled out with caution. Take intelligent, logical steps and do not exceed the risk you're willing to expend. It's kind of like going to the gambling table, right? Don't put up any more money than you're willing to risk. And that really is what it is. If you're going to use the technology, make sure that that can't cost you more than you're willing to risk.
Exactly. Well, thank you so much, Theo. This has been great. I really appreciate you coming on the program. Everyone, please remember that this will be available to you online. You can share this with your peers, your colleagues, your friends, and we'll see you again on another Cybersecurity Insights series. Have a great one, everyone. Bye.
Thank you, everybody. Bye-bye.
You're welcome. Bye-bye, everybody.